Spoken earlier on about the Chinese Purchasing Managers Index, the PMI. We've talked about the Eurozone PMI, both of which looked a little bit tentative at best and horrible at worst. In the studio with me now from Kagiso is Abdul Davids, the head of research at Kagiso Asset Management. Abdul, thanks very much for coming in. Let's have a look at this now, because last month wasn't particularly good. And today we've got some good news. And let's embrace good news when it comes from the South African economy, because we've been used to bad stuff. It says, after contracting to below the 50 level last month, the seasonally adjusted Kagiso PMI has gained 2.8 index points to reach 51. So we're expanding again. Good news.
It is good news, and thank you very much. I think in the context of, as you've mentioned, a very uncertain world where a lot of the Eurozone PMIs are still very much stuck below that 50 level, our index at 51 is good news on the face of it. We are, however, a bit concerned about where that 51 has come from and how it is made up of. As you have mentioned, some of the broader components like the new sales orders, the business activity, has since a rebound in terms of those numbers. But we believe that if one delves a bit deeper in terms of how those numbers came about, it is really just the underlying respondents saying that there's been no change. And it's really just a small number of respondents saying that there's been a slight improvement that has driven that recovery that we've seen. Okay, so you're talking about new sales now, because new sales was really sluggish last month, wasn't it? Right. Okay, so you're saying that even though the new sales is up this month, I think just 52 or 52.2, something right, like that, the fact is that doesn't reflect new orders. It just means that or an increase in new orders. It just means that they've maintained the same level as last month. Yes. So if one looks at the survey, it's done by over about 100 respondents. So last month, because of the big drop-off that we've seen in the new sales orders numbers, and bearing in mind from month to month it can be a bit lumpy. This month we've seen just a small number of those respondents saying that there was a slight improvement. The vast majority said that there was no improvement from the very low and depressed levels from last month. And because of that, we've seen the recovery in that index as well.
Look at the other major sub-indices that have really caught your eye. Any features that you want to tell us about?
Yeah, if you look at the price index, that has come down. We've seen the rand being quite volatile, but we've also seen some of the commodity prices coming down quite significantly and appreciably as well. Now, that is good news for the PPI. Quite a few of the commodities feed into our manufacturing sector, and they also feed into our PPI as well.
Are you a leading indicator when it comes to that? I mean, the price index, does that mean we've got a 6.6% PPI at the moment, we've got a 5.5% CPI? Are you telling us that we're going to get lower inflation readings both at the factory gates and at the retail level?
I think we're only a leading indicator to the extent that we've got a timing advantage on the next PPI number that comes out. So, but hopefully that has been the trend over the last couple of months. Is we've seen the softening in the price index, and we've seen the coming down of the PPI as well.
What about the employment side of things? Because we've just had the second quarter employment numbers released yesterday, showing that we are sort of slowly clawing back some jobs, which is so vital. What are you seeing?
Unfortunately, part of that release that we saw yesterday from Stats SA was that the manufacturing sector continued to shed jobs, and quite an alarming rate as well. Unfortunately, we know that the mining directly is obviously not part of the manufacturing sector, but the mining services and ancillary services gets affected as well. So something like contract mining, which has been discontinued by some of the bigger sort of platinum mines, etc., is starting to affect the manufacturing sector. Also, ancillary chemical services, for example, gets affected domestically when mining ceases or they put some of these mines on care and maintenance. So the outlook from that point of view is not that rosy, and as a result, we've seen that employment index coming down below the 50 level again.
Business activity, that also gained 3.8 points. That's quite a good move. Is that significant?
We would look to the longer term trends, and again it's a lumpy number, and obviously it's reflective of what's currently happening in the sector. And again, if one looks at the respondents, quite a few of them have actually said that there's been no change. So it's really driven by a small number of those respondents saying that there's been a slight improvement that has driven that number as well.
If you take all these numbers and you take the trend, and you've been following this for a while, you're involved in the compilation of the index. We had a bad month last month, we've had a bounce back this month. What does that tell you about the next month and indeed the rest of the year, especially when you see the PMI data coming out from other geographies?
And that's a good question, and what we typically look at is the quarterly averages. So in the first quarter of this year, we averaged around 55, just over 55. The second quarter, we've averaged now about 51. And this number for July, which is the first month out for the third quarter, is spot on the last 3 months average. And that's probably the trend that we'll see, is a declining trend and hopefully stabilizing above 50. But I wouldn't be surprised if we see the fourth quarter average around 50 for the final quarter of this year.
Okay, so nothing spectacular, but nothing too disastrous either. We're not going to go into a Germany situation at 43 or a Spain or Italy situation around 44.
Yeah, barring obviously exogenous knocks coming through from the Eurozone, etc., we don't foresee that to happen.
Okay, Abdul, thanks so much for your time this lunchtime. That's Abdul Davids, asset manager, or rather director of, let me get this right, head of research, excuse me, at Kagiso Asset Managers based in